Welcome traders, I'm Adam Harris and I'm with you on IC Markets Market Commentary. And so what I want to do or at least in this week's video, is draw your attention not just to charts that are providing some good opportunities, but charts that I would certainly stay away from in the meantime. And so what I'm going to do here is just start off with gold. So first of all, let's talk about gold on the monthly. We can see that we've had this very strong reaction certainly in May, and we can see that potentially price is about to break the low. So this is a strong rejection candle. It's the third one we've had at this level. We're potentially about to break the low. If we do ultimately break that low, we're then more likely to see gold head down to the lower level. So what I'm going to be looking for here effectively is to stay away from gold until I either get a break of the low, which means that momentum is likely to shift lower to the next major level, or potentially wait for a bullish candle. So effectively, I would say that for the majority of June, and certainly for the remaining period of June, I'm most likely going to stay away from it. If I move across and have a look at West Texas crude oil, I beg your pardon, not gold, crude oil. One of the things I just want to highlight here, as we can see, we have these wicks along the bottom here. We can see prices trying to stay above this, let's call it $70 level. And generally speaking, there appears to be a series of lower highs, very much range bound, very choppy. Basically, at this point in time, there's just nothing really happening with crude oil, and therefore not finding any opportunities there. So nothing in gold, nothing with crude oil at the moment. The difference, I guess, between the two is that I do think that gold will ultimately reveal its direction, whereas crude oil, we just really do have to wait and see. There are no clues. Then we move along and let's have a look at the US indices. They're all looking very bullish at the moment, looking very nice and healthy. We are at a significant resistance level for the Dow 30. And so one of the things I'll be looking for is to see price break above that. But overall, I would say that the condition and quality of the trend is looking very nice and healthy, especially now looking at the S&P 500. A little bit overextended on the daily. Let's have a look at it on the weekly. You can see here it's broken above these previous highs, broken above the July highs of last year. This is all very, very nice and healthy. To see that at some point, I would expect that we will get a retracement. But if we go back to the daily, it's a little bit overextended here. So for day traders, we'll now be entering some sort of cautious. There'll be more caution in their trades because they'll be looking to see if we're going to get a daily retracement. For swing traders, it's really just waiting for that pullback into the moving averages and looking for a nice little bullish candle to provide a trend continuation to the upside. Overall, the state of the indices is super nice and healthy, just potentially overextended. So in other words, what that means is we're in a bull market and we're looking for entries back within that once prices retraced. If we have a look here at the NASDAQ or at the tech stocks, beautiful. The quality of this trend with the 50, the 20 and the 10 all in the correct order. Price is behaving in a very smooth, orderly fashion. We call this optimal price action. We can see the MACD is producing higher highs. We can see that the RSI is trending higher. At some point, yes, it's reasonable to expect that we will have a weekly retracement, but overall, the quality of this trend implies that it's a very healthy trend and it's likely to continue for a while. We do have the FOMC. We'll see if there's going to be a rate hike. However, the overall state of the economy in the US is very strong and looks to be only getting stronger, and therefore for me, I don't expect us to see a change in the overall sentiment of the market. I expect it to remain bullish and then just look for bullish opportunities there. And it's something that would take several weeks to change anyway. It wouldn't change overnight. Comparing this, for example, to the UK, we'd have to look at it on a monthly. Here, for example, you can see we've broken through this level of resistance. Price has come back up and is currently producing a bullish candle. So should it close as a bullish candle at the end of the month, then the probabilities imply that we will see the market continue higher. So point being that although it's a lot more choppy and it's currently in a bit of a downtrend and going sideways specifically over the last week, the probabilities and the overall pattern imply that it is nice and bullish. Let's move away from that. Let's have a look at Ethereum. So I'm going to skip Bitcoin for now because when we look at they're so highly correlated, we can just look at the one. Ethereum is largely range bound. Okay, I would note though that it is in an uptrend here. We're producing high lows, high highs on the weekly. Let's call it the last month and a half, price has gone largely sideways. We do have the 50, 20, and 10 in a bullish formation. It is sitting at a level of potential resistance that might become support. So for now, it isn't offering any clarity. The overall flow of it is more bullish than bearish, but it hasn't really given us any bullish signals at this time. MACD is nice and bullish. It looks fine, but it's just not trending very well. Then let's talk about NVIDIA. So the reason I wanted to talk about that is obviously it's been in the news lately, especially with regards to AI. It's very, very bullish. It's very overextended. Okay, so this is a dangerous territory because most people, the urge to jump in on this and to potentially not miss out is incredibly dangerous. This is now very overextended and is much more likely at some point in the near future to stall and retrace or potentially come back down to these highs than it is to continue up. If it continues up, then it's in a bubble. So either way, it's very dangerous. And so this is something I'm certainly very cautious of. My expectation is that over the remainder of the year, it will continue to climb. But at this exact point where it is now, I consider this incredibly dangerous and overextended. Let's have a look at currencies. One of the ones I find very interesting at the moment is Euro Swissy. It's not the most perfect trend, but it has shifted now into a more bullish mode. So there's some very nice bullish divergence. We found some good support here around that 96.70 level. Price has now come up, broken these previous highs, and is attempting to turn around. So in other words, it's looking to come back down into these old highs, potentially produce a bullish signal, and then push higher. If we look at Pound Swissy, we can see it's definitely in an uptrend, pushing higher. It's at a current level of resistance. My expectation is if it can break through this, it's going to continue to the upside. And then the yen crosses, as usual, looking very, very nice. We can see euro yen here is also looking very nice. It's trying to break and create fresh highs, and so pullbacks on that could provide some good entry opportunities to the upside. And finishing off today with pound yen, which is looking very, very nice again. And there may also be other yen crosses. I would say that it's dealer's choice. Have a look and see what your thoughts on these are. But very, very nice, happy, healthy trend. The 50, 20, and 10 in the correct order, nice and bullish, and overall those trends looking very nice and healthy. So it is, just to sum up, there are certain markets I'll certainly be waiting because there's not enough evidence right now to imply where they're going. Overall, the US global indices are looking very nice and bullish, and so that's great for the bulls, and it looks like we're potentially out of that bear market for now, for the next few years. We'll see how it goes. Remember, it'll take a very long time to shift back to bearish if that's going to be the case. We'll see. It would take several weeks to do that. Otherwise, a lot of these are looking very nice, and there's some good opportunities across all the different asset classes. I'm going to leave you with that. I want to wish you a wonderful week, and I will see you in the next IC Markets video.